Your results, Keith, I think calmed nerves in the sector after big drops in the stock yesterday. Why do you think people were so nervous, and why are they? What reason do they have to be optimistic as far as shareholders and analysts now?
Good morning. Again, a strong start to the year for us. RevPAR up 3.7%, and the number of hotel rooms, our net system size growth, up 4.1% in the first half of the year. That combined for underlying profit growth of 8%, earnings per share up 25%, and gives us confidence to raise our interim dividend by 10%. So really strong set of performance there, underpinned by an acceleration of our signings of new hotel rooms around the world, up 46% year over year, supported by a number of strategic initiatives we announced earlier this year to become more efficient as a business, to then drive that investment behind launching new brands like the Avid Hotel brand in the US, the Voco Hotel brand in upscale in Europe and Asia, and the acquisition of the Regent Hotel brand in the luxury space too. So a lot of confidence around what we've done in the first half and confident going forward.
Keith, can you address the RevPAR issue in the United States? We had Morgan Stanley issue a note on the 25th of July. It said that the downside risks facing you may be augmenting and US growth may have peaked. Has US growth peaked?
You know, we saw RevPAR actually accelerate into Q2, and the fundamentals excuse me, in the U.S. are really solid. When you look at growing GDP, the impact of tax changes, record low unemployment, and actually muted supply growth, fundamentals are really strong for the hotel industry. But the industry has some tougher comparables in the second half. When you look at some of the shifting of holidays, some of the religious observances, but also more importantly, the tragic impact of the hurricanes last year in the United States, which created an abnormal surge in hotel demand later on in the year. So again, very confident, but tougher comparables in the second half.
Goldman Sachs says they're reassured today from the numbers that you put out, but that the numbers would have been better if you'd closed M&A activity in the first half. Does that mean we can expect a bump in Q3 and Q4? What's your outlook for the second half?
Well, you would expect to see an acceleration of our net system size growth, which is a key metric for our industry. We closed on 2 strategic deals on the 1st of July, so those rooms will be coming in the system in the second half of the year. So you would expect to see, as we've talked about, our growth leading towards industry-leading levels going forward and seeing acceleration in the second half.
Richard, Keith, can we talk about the B word, Brexit? Because back in May we had Marriott reporting weak demand from financial services, blaming it on Brexit. I mean, is Brexit having an impact on your business? I know the UK is only 5% of your revenues.
It's not having a material impact on our business at all, but I mean, Brexit is uncertainty and business doesn't like uncertainty, and so we've been working with the government so they understand the industry issues that need to be addressed throughout Brexit. We're actually lucky, though, that the UK is such an incredible international inbound market, and with where the pound has moved recently, it's been increasing in demand overall for the UK. Some tougher comparables in London this summer, but overall we're quite positive, which led us actually to do one of the deals we did to acquire through management 12 more luxury boutique hotels here in the UK, because we're very confident about the long-term health of this market.
Are you going to run into tougher comps, Keith, in the Greater China area in this quarter? Is it going to be more difficult to post good numbers with a schedule, with the date changes in the third quarter?
You know, we saw an acceleration in the second half of last year into China, and that carried over into the first half of this year with RevPAR up 10.1%. So a pretty stunning performance. I was actually in China just 2 weeks ago meeting with the team there and seeing the health, the growth, the acceleration of our business there, and it's really impressive. You do get some tougher comparables in the second half of the year, but again, we're opening up a significant number of hotels at record levels and signing there, which will drive the long-term performance of that market for us.